All right, cool. What's up, guys, and welcome back to another video. So in today's video, we'll give you guys another recap of every single trade that we took today. Today's Monday, the beginning of a brand new week, and honestly, we started off this week very nice. So I'm going to give you guys the analysis, the breakdown of every single trade that I took. Today, I was able to take a few trades with gold and another trade with US30. Both of them, all of them played out very nice. I'm just going to give you guys the analysis, right? So we're going to start off first from yesterday trade, or Sunday trade that was open from Friday, which was this exact sell position over here. We did not hit the full take profit, which was supposed to be around the 1 to 3 risk to reward. Notice how price action kind of wicked it out from it. So we had the nice push towards the downside, but we kind of wicked it out and never really end up hitting that 1 to 3. We did manage to secure over 190 pips, right, which was over a 1 to 2.8 risk to reward. This is where I told everyone, majority to, secure most of your profits and just continue holding with stop loss plays that break even. Obviously, from looking at it at gold from a higher time frame perspective, so we go into a higher time frame perspective, notice the market trend, notice the market direction. Where is price heading from? We're heading towards the upside, creating very strong higher highs and higher lows, as well creating new all-time highs. So if we look at it from a daily, weekly perspective, and if you guys have been watching all of these breakdowns, you guys have been seeing every single trade that we've been taking with gold. I also explained to you guys, how the monthly, this was like weeks ago, I also explained to you guys how the monthly, we have seen that price action has attempted to break above multiple times till we finally getting these entire nice move. So August was the start of the bullish move. September, we're continuing that entire bullish move, right? So we took some very nice trade of the perspective from Friday trade, which it did play out the way that we anticipated, which gave us a very nice 1 to 2.8 risk to reward over 190 pips. So in this trade over here, I was able to manage to make over 600, I believe it was $600 in this trade. Let me just double check. 600 off this trade, I believe I made. So we look back in the sales position, closed. We're looking at the sell, my bad, $484.75. So I made $484.75 with this trade over here. Very simple trade. This trade over here obviously was a high risk trade due to the fact that the trend continues being bullish, right? Continues being bullish. This was mostly a counter trend trade, right? Obviously bringing it to the next areas of interest. So if I give you guys pretty much an overall run, the areas of interest that I was interested in buying the market was honestly going to be a little bit lower, which was this entire broken structure. So notice how this was late Friday or early Friday, notice how we had a very big candle push towards the upside. This upside happened during the NFP. Friday was NFP. We had a very strong break towards the upside. Obviously, we expected for the volume to be very high due to the fact that, again, we are trading the NFP. NFP does bring out a lot of volume. So I was expecting for price session to obviously have that push towards the upside, and then the next move give us a pullback towards the downside. But notice exactly the high that price session broke above. We broke above these highs over here, which was once considered as the all-time highs, which was formed on Wednesday. Now, Friday, we broke above it. What do we form next? We form a new higher high, right? So we form a new higher high over here, and we've seen that price session has been selling the market towards the downside, right? So I'm going to give you guys an idea why we took these sells. So notice this entire push towards this upside. We have a nice push towards the upside, and now this is technically where buyers are now taking their profits from. This is the ranges of price action of pretty much buyers or traders, taking away their profits. So this is the buy ranges. This is where we can expect that buyers are securing the profits. So for example, some buyers secure profits over here, we got a push towards the downside. Some buyers secure profits over here, we got another push towards the downside. That is mostly of the buyer viewers. Now we're looking at it from a technical wise. Obviously, we have broken above a highs over here, which obviously price session has respected it. Because again, the trend continues creating new higher highs and higher lows. So we're just basically following the simple market trend structure. We have a new high, we get the next higher low. We build an area of support where buyers were protecting. So technically, another way to say it is that these are demand zones. These are zones where there was orders being placed still. So again, we have another push towards the upside. This is where another buyers started taking their profits. So this is now considered as the new higher high. We came out, we swept away these highs over here, price action closed underneath. This is where price action started having the shift to structure. We entered a little bit early. This was more of an aggressive entry due to the fact that I was more expecting for price action to clear out the liquidity from here. So this trade over here was mostly of a high risk, again, due to the fact that there was no really price action towards here. But it's like very common sense that obviously whatever goes high has to come down. And obviously it's not going to be something that you're going to be shorting every single minute. Again, these are very counter trend trades, which if it doesn't make any sense, there's no point to actually put in the risk, right? But this trade over here didn't make any sense, make a lot of sense due to the fact that we had NFP move here. We had the first entire push towards the upside. Then we have the exhausted. We noticed that sellers were trying to stick into the markets, right? But buyers obviously were holding on. Then we started having the push towards the upside. We formed a new high, and then this is where price action started having the little kind of shift towards the downside. This over here is obviously considered as a bullish ranges where buyers are now taking their profits from, right? So very simple. Buyers were taking their profits from there on. We did get a very nice push towards the downside, but overall, we look at it from this perspective. We go back into the 15-minute time frame. We're looking at it from a technical wise perspective. We're still trading above these highs over here, where price action did form areas of demand. So this was where, let's say, 80% of buy orders were being placed, leaving 20% of orders. We have the push. These are the 20% orders over here, where price action comes back, respected these demand zone. Another way to look at it, we're also trading above these highs over here. These highs over here was once in areas of resistance, which we did see some sellers action, but now this is where price action has fully broken out of the structure, creating a new high. We look at it from a higher time frame perspective. What do we have over here? We have as well higher lows. So we have highs, higher lows, a new higher high, and a new higher low. Perfect. Price action starts pushing the market towards the upside. So now we're going into today's market section, right? We're going to go into today's market session. These are the levels that I had marked up. At the point over here, these over here were considered as the New York session or the London session highs. And then we also have the pre-New York session highs over here, late London session high as well. So we're going to kind of mark this up and we're going to clone this because I did have this mark up, but I did delete it a little bit earlier today. So these were the levels that I simply had marked up this morning. And I'm going to explain to you guys why. The first level we had marked up, or the lows that we had marked up, are going to be this ones over here. These are the London session lows, right? This is exactly where the market kind of opened out during the London session and formed that London session lows, right? So again, this is going to be considered as the new higher low from this entire bullish move towards the upside. So we have the higher low over here, like I'll say like the the new lows over here, the breakout of structure, breaking out of these highs over here, forming a new higher highs, right? And then price action comes over here, forms that new demand zone, the new higher low, and then starts breaking above structure. Once we start breaking above structure, what do we form next? Simply another higher high. So you guys can literally see how the market pattern just repeats itself over and over again. So for you guys to consider this as a valid trend, obviously you guys always got to look at it from a higher time perspective. So we go here into the 1 hour time frame. What are we looking at? We're looking at the 1 hour time frame perspective. We're seeing that price action is holding above all of these entire intraday structure, which means that buyers are still in control in the markets. The only way that buyers are no longer in control of the markets is one, we break underneath here, or we break underneath here. But price action is still trading above all of these entire levels, which still shows that buyers are still actively in the markets, right? So very simple. We're going to go down to the lower time frame once again. We have the 6 a.m. over here, which was the pre-New York session, and then price action starts having a little retracement. So these little retracements are levels or key areas where buyers are now taking their profits from. So for example, this is where buyers started taking profits from this entire move. We're now having that little minor ranges from this point to this point over here. This is where there's no active buyers or active sellers, right? So this is where a lot of people make the mistakes with the counter trend trade sells or counter trend trade buys, right? For in this case over here, let's talk about it with the counter trend trade sells, right? Sellers are going to be stepping into the market only if there's a proper confirmation that market is shifting structure. So I'm going to give you guys a good example whenever you guys are looking for a selling opportunities. Check this out. We're having a push towards the downside, right? So let me give you guys an example. We're having a push towards the downside. This is where sellers are now taking their profits. People are going to be taking their profits from this exact move. Let's see that there were sellers in here early in the markets before us. This is where sellers are now taking their move. So now there's a little type of retracement, right? Now, if you guys look left, there is no other key zones that price action is having a reaction from it. These points over here, if we're looking at it from the actual perspective, these key points over here are considered as new all-time highs. So there's two ways that the market has this type of retracement. The first retracement, which is obviously the basic, which is it comes into a key level, respects it, rejects it, and then having the pullback towards the downside. Or price is being exhausted, meaning that there's a lot of buyers, a lot of sellers in the markets, right? So that's exactly what this type of move means. We have the first push, price action comes back, respects it. Okay, cool. Back again. We have more buyers we have buyers holding these levels over here. Buyers comes back over here. What do we have? Another specific move, another push towards the downside. But notice how there's no seller actually being confirmed yet. The only way that we can confirm a full sales over here is, first of all, that we obviously reject these highs over here and we start having the break of structure. Even then, this will be considered still as a high risk because, again, we're still trading above these intraday highs over here. So there's no point for us to be selling the market now at this point over here. This trade over here, they kind of make sense because we were in the action of selling the market very late during the session. And we have obviously seen the entire thing that's been happening during the early session, which was very aggressive move. So the possibility of price action having the potential switch towards the downside, well, the risk to reward was obviously there. So for example, there was no sellers here. And even then, if we're trading under here, we're still trading above this structure. So obviously price action will probably be having some bounces like this. A good zone to be selling full time, obviously, will be in these areas underneath these zones over here, which will make 100% more sense. But that's not the case. Now, check this out. Price action forms this new high, minor higher low, boom, a new higher high. Very simple. What do we come here during the early New York session? What are we retesting right over here? Check this out. Previous highs, new highs, higher highs. Pullback, higher low. Resistance now turns into areas of support. Very simple logic with trading, right? Now, this morning I had two key zones to buy the markets, right? So the first key zone, this is actually our second entry, which was set at 36.16. So the first key zone was a break and retest above these entire structure over here, which is going to be set at the 36.20. So I waited for price action to come back, retested this exact zone. This is one demand zone over here. Price action came back. Buyers were still holding these exact levels over here, right? We were retesting these exact highs over here, which price action is now holding it as an area of support. We have the impulse move towards the upside. I'm not going to be taking a buy position just because price is trading around these levels over here. We first need the breakout of structure. So the breakout of structure, if you guys go into a 1 minute time frame perspective, let's go all the way back to a 1 minute time frame perspective. Let's go a little bit more back. This is taking, I gotta get a new computer. This is taking way too long. My computer lags a lot, but whatever, it's not the case. So if we look at it from a 1 minute time frame perspective, right? I want you guys to take a look right over here. Notice how once buyers started taking their profits from this point over here, we're having the downtrend. So we are breaking out of the structure from this entire trend. So from creating higher highs, higher lows, highs, higher lows, higher highs, we have a low, a higher low, but now we also have a lower high. Again, these are minor structures, not really all-time structured, nor like my major structure. These are minor structures. Really don't mean anything, but these are confirmations so that you can wait for entries on, you know, whatever perspective you guys are looking for, right? So we have the minor structure, the minor lower high, and then we also have a new lower low. Now, these are obviously considered on the higher time frame. These are considered as lows, not as lower lows or higher lows, because we are respecting these exact lows, which are going to be considered as equal lows, right? But this is a lower low compared to these minor lows, but really that does not matter. Now, price action is trading under the structure. So what is the idea of us taking the market if price action did the same thing over here, did the same thing over here, and did the same thing over here? There's no good risk to reward at this point over here. Now, what we waited for the first entry was simply a breakout of the structure between this exact zone. So usually whenever I enter a trade, I always have to wait for the break of structure of the areas of interest. So I'm gonna give you guys an example. Let's say these are the major highs. And then we have the next candle, obviously have another pullback. And then the next candle has the final break towards the upside. And we close above it. When we close above it, we always have a wick above it, right? So the wick above it whenever price action close something like this, my entry is always going to be set as a buy stop above these wicks over here. So the next candle can either come, retest this little minor zone, and then the next candle over here just activates our trade and then goes into our ways. Or it can go the opposite, depends on, the volume in there, right? But that's not the case. So check this out. What do we have? Price action comes back towards these exact key levels. We are overall respecting these areas of interest. We have the breakout structure. Cool. Where is my entry going to be placed? My entry, the first entry that I had placed was at 36.20. 36.20 was my entry, or let's look at it from another perspective. 36.20.80 was my entry. So we waited for candle to close above these entire structure. So we have I had marked up this level here, and I also had marked up these areas over here, like this. So boom, we got the breakout structure. 36.20.80 was my entry. Price session activates it, but what do we come back? This was during the New York session. So New York session has the volume. I liked overall how everything was playing out. This over here did not really scare me, right? Because overall, we're still trading the higher trends. The higher trend obviously still indicates that the market is still very much bullish. So we had a little drawdown, little push towards the downside, but then we also had marked up these key levels over here, which was holding perfectly fine. So the idea was, hey, if price action comes back towards this level and we have the sweep out of these lows over here, this is exactly where I'm going to be entering a second position. What do we have? We have price action comes towards these equal highs over here, rejects it, not fully, minor, has a push towards the downside, respected all of these entire broken zones. Notice how we maintain itself above this 15-minute candles body highs over here. If price action would have closed in underneath, then that's a different story. That's exactly where we're going to exit out the markets, right? But price action maintained itself above these body highs over here. We have the first sweep, and then we also have the second sweep. All we simply waited for was for price action to obviously close above it, which this over here was our new entry. What happens from there on? Price action overall respected all of these trade over here, or all of these levels, and we finally had the push towards the upside where we end up hitting our final take profit for a 104.6 risk to reward. Very simple trade. So again, the idea of this trade, we have the breakout structure. We're following the trend. We have the pullback to retest these areas of interest. Resistance now turns into area of support. We have demand zone where buyers previously stepped in during the early session. We have noticed that buyers were protecting these zones. We have the breakout structure, which was our first entry. We get the pullback, and then we notice that price action is still respecting these zones. So these lows over here are being respected, being protected by buyers. So we end up taking the buy position. If I would have held this trade over here, we would have at least, this would have been almost at least a 1 in 10 risk to reward over 290 pips, which would have been amazing. But very cool. Now, what do we have next? Notice the market trend. What is the market trend? Market trend is now having the push towards the upside, repeating itself over and over again. We have highs. We have a new highs, pullback, support, buy the market. We have a new high, break above these highs over here, pulled back, use it as support, breaks the market. Now, these two moves over here, I was not active in the market. I was not home. I went to go grab coffee, right? I went to eat at a restaurant very quick before coming back towards the second session. But I did like the overall trend. Now, my second entry, round 2, we didn't unfortunately hit stop loss because, again, this was taken very late on the session. And then price session was just, slowing down. We were finally slowing down from this entire impulse move from the New York session. Now, very simple. We're just simply creating what? New lows, highs, higher highs, or higher lows. We have a higher highs, a higher lows, and a higher high. So the same thing that happened right over here, I was looking for it right over here. Again, we have a higher low, higher highs, higher lows, higher highs, higher lows, higher highs. The idea is to get the next pullback and now form the new higher low. So what do we have here? We have the break of structure, retested these areas of interest. We have the pullback towards these levels of interest. We have the first reaction from it. We have the 15-minute candle sweep. Then we have the break of structure. We have the 5-minute candle closing above it, right? You see that 5-minute bullish engulfing candle. We go back into the 15-minute time frame. Notice the 15-minute time frame. We have a sweep towards these lows, and then we have a 15-minute candle closing above it. Cool. We go back to the 5-minute time frame. We have a pullback towards this level, showing us that buyers are now protecting the markets. So remember how I told you guys how I enter the markets. I always have to wait for that candle closure of the 5-minute time frame and the 15-minute time frame as well. And I'm always entering off the previous wick highs, right? So that's exactly what price action did over here. We have the 5-minute candle closure. We have the second candle over here, which was retesting the areas of interest. Entry was set above these highs over here. We get the pullback. We did see the price action maintain itself above it. And then boom, we have the push towards the upside, which activates our trade. Now, our trade over here got active. We went profit a little bit, almost hitting TP1. But then price action comes back towards these levels, and we're seeing that price is maintaining itself above it, which it gave me a little bit of hope, showing us, okay, we might see this. We're just probably seeing price action have a little ranges, right? That's not the case. Price action comes back over here. We end up respecting these minor highs over here, which unfortunately price action failed to continue breaking higher, right? Now we failed to break higher, which we end up hitting stop loss on this trade over here, which is dope. This trade over here did end up making back all of our losses, right? So this loss over here was only a negative 1%. This trade over here, we did make over 4.6%. So we're chilling from these two trades. So again, we're going back into the profits. Yesterday's sells, I made $484.75. This morning with the buys, I made I made $662 in this trade. So I made $662 in this trade over here, and I lost $143 in this trade over here. So in total, I did close out the day very, very strong in profit. I'm gonna give you guys the P&L of what I made this week. Well, today P&L, I made over, let me give you guys, yeah, we made a lot of money today. We made over $900 this morning. $982 is what we made this morning. Beautiful. So we lost this trade, we won this trade, and we won the yesterday trade as well. Now, price action just continues ranging. I'm still overall liking this price action. I might be entering a very buy position very soon. Maybe during the Asian session if it comes out. Again, I'm not really going to be trading the Asian session and the London session. I really focus more on the New York session. But if it's worth taking that risk, then why not, right? But again, the next idea is just simply wait for price action to close above it and then obviously have the high push towards the upside. Very simple. So this was the trade that I took this morning that made me over $900 this morning, right, on a Monday, which is dope. Starting off the week very, very nice. If we look at US30 is very simple. I'm not going to give you, well, this is completely different groups. I focus more on gold one. This is more of my personal trading with US30, but US30 was a very simple trade as well. Obviously, we're in an overall bullish run as well with indices. We did see that after this entire push towards the upside coming into these all-time highs over here, where every time that price action comes towards this level, we are seeing a type of bearish reaction from it, right? Now, I want you guys to notice this perspective right over here. Before having this entire push towards the downside, we form a new lower high over here, where price action was being respected, seeing that sellers were stepping in the market until we finally broke out of it. What does that mean? We form a new high, respecting all of these highs over here, which price action just simply did what history does, which is, repeats itself. So we had the repeated over here, we had another repeated over here, and we also had another repeated over here. But notice how once we form these new lows over here, we form a new high over here, we broke out of these highs and then form a new higher high. In this case, these highs over here are higher than the previous one, which is going to be considered as a higher high. But if we look at it from a higher time frame perspective, these levels over here are going to be considered as a equal highs, right? Now, Friday, we had the NFP. We have NFP pushing the market towards the downside. But notice how on Friday, we respected this key level. Resistance, resistance, resistance. Previous highs, new highs, comes back, uses it as support. We broke out of it. Price action respected it. We have the push towards the upside. Price action comes back once again and have another push towards the upside. We're respecting these little key levels over here, which was areas of support, which is very simple market structure. So again, we have these highs, we have these lows, and now we have a potential consider this one over here as a lower high, because these highs over here are lower than the other one. But if you guys take a look at it from a higher time frame perspective, we're still trading above all of these entire key level structure. Zoom out to the left side, you still have more areas of resistance. Resistance, 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 resistance. Break above. Support, support. What do we have early session today? Early New York session. We have the push towards these levels. Buyers, my bad guys. Buyers are respecting these levels. You see that? Now again, this is where I told my team that this is going to be considered very risky, due to the fact that I do believe that these are minor buyers, right? Not full-time buyers. Might be full-time buyers now, since we finally broke out of these entire key levels over here. By the time, these were minors, because notice how price action was just having a bounce and not having a full direction, right? So what I mean by that is just simply bouncing, 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 bouncing. Where is the direction over here? We're just bouncing from key levels to key levels, respecting previous structure. So this one over here is bouncing towards the downside, respecting these previous areas of support. This one over here is respecting towards the upside, respecting these entire key levels of resistance. Now, during the late agents on New York session, this was really called out during like 1 o'clock, 3 o'clock almost. Price action comes over here, comes back, forms a new higher low, respects these entire bullish fair value gap right over here. We come over here, we swept them out, we maintain itself above it, the fair value gap, this demand zone over here, and we enter the market. We have the first rejection, which is this wick over here. So very nice 5-minute wick candle over here. We go to the 15-minute time frame. We also have a very nice 15-minute time frame swept towards these lows, and it closed above these lows over here, which is going to be these candles right over here. So that's exactly where I entered the market manually, which my entry was going to be at this bullish engulfing candle. So we have that nice candle, which was our confirmation, and we noticed that price action came back, retested, we maintained itself above these levels over here. If price action would have gone something like boom, 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 then obviously we're not being this trade. But that was not the fact. Price actually maintained itself above it. So this is where I told everyone, hey, I'm going to attempt this zone before we attempt these other levels over here. So these other levels over here, which is all the way down at 45,120, is another areas of interest where I was interested in buying the market previously, right? But price action overall did manage to respect all of these zones over here, which is great. And now we had the push. I'm like falling asleep in this. It's funny. I've been up so early this morning. I've been up since 6 in the morning. I've gone to bed to like 3 in the morning. But it's good. So we had the push towards the upside. And now we have finally broken out of this entire key intraday structures over here. So obviously the idea will be to see if price action just pulls back. And then we hit the final TP. Cool. That's exactly how I entered the markets. But I hope you guys enjoyed this full breakdown, this full recap. And I hope you guys enjoy the way that I break it down, the way that I explain myself, the way that I look for these type of trades. So I hope you guys enjoyed this video, and I'll see you guys on the next one.